what are some of the things? I know I got to believe, because I just know how this goes, but I got to believe your phones have been ringing, a fair amount anyway, and you're probably having a lot of conversations with a lot of people on your end. What are they? What seems to be their biggest concern right now? Is it a short-term concern or a much longer-term concern?
It's always short term.
Yeah.
Everybody's always thinking in the short term. Seems like there's always something to be really concerned about. And, when things go for so long without any pullbacks, other than the short one that we had last year because of COVID, people start getting nervous and they start thinking, it's time, things are going to pull back. And
This is it. This is the big one.
yeah,
Right.
yeah,
Yeah. Yeah.
yeah.
So they're still, are they looking to hide their money? Are they looking to get into, are they so concerned that they are saying, hey, or at least asking the question about, getting out of the
Yeah,
market?
most of the people that I work with just don't know. That's why they're working with somebody else, is that they're looking for guidance and, looking for direction on that. And I think that they just want to be with somebody that kind of knows those things, but there's always concern, I think.
Yeah. Hmm. So that's the bulk of it, and I guess that's true. It's true everywhere. I mean, I know that is, the biggest concern I see from an email and perspective is people, that I hear the same words. Is now a good time?
Hmm.
I mean, that's what is now a good time. Should I get in? And most of the time, if they give it some thought, they a lot of times they can think about it and figure it out whether it is. But it's different for everybody. So, I mean, I know the thing that I'm most confused about are the people that are 75 and 80, and I want to make an investment. Not now. I mean,
Hmm.
I would say no, but it really depends on your circumstances, and everybody's different. So you got to
Yeah.
pay close attention
And
to
I
what we
think the
say.
people that are concerned and asking the questions are the ones that are always concerned and always asking the questions.
Yeah,
They're the ones that got out, right before the election last year, or they got out, before the election between Trump and Clinton, or they got out in 2008 and still never got back in. So they're the ones that are always concerned about, the negative and the downturn.
yeah. And they're the ones that are the hardest for me to talk to, because
Mm-hmm.
they're going to do it again.
Mm-hmm.
Oh no, I've learned my lesson. No, you haven't really. I mean, I don't say that, but that's what I'm thinking. Trust me, I'm going to tell you what I think, and I think it's not going to happen. You will do it again.
Mm-hmm.
And what those people would be so much better served if they just understood that they're not, they don't have the right makeup
Right.
to be an investor, and they shouldn't be. And there's nothing wrong with that. But, you just got to be a ferocious accumulator and, try to earn a little bit of interest and not worry about anything else, and otherwise you're just going to be miserable all the time.
Yeah. Yeah, and I think with as much experience as you've had dealing with people and listening to people and talking to people, you can discern that right away. And I think that you always give good advice to those people. And that's the one thing that they have to be aggressive about. If you don't have an aggressive mentality about risk and volatility, you have to have a very aggressive approach towards saving and accumulating, like you
Yeah.
said.
Yeah, that's it. You got to be just a ferocious saver. I met a guy in the southern part of Illinois, all farm area, but he worked for the state, I think. If it wasn't the state, it was a local government, but I think it might have been the state. And he was very adverse to investing, didn't want to do it, couldn't do it, could not even think about the risk of losing money. But he was well set for retirement. He had nothing to worry. He had so much, because he was just a ferocious saver, had some good years in CDs back, back in those good years, which seems like a lifetime ago. But had some good years, but, saved everything, lived very frugal. And he doesn't need, and, I remember talking to him. He says, I think I'm retired now. I feel like I need to invest. I said, why would you do that? Your mentality of losing money, don't do it now when you're not accumulating.
Right.
Because this is as good as it's going to get, what you have right now. It's never going to get any better. Yes, if you were an investor and you could leave it sit for 10 years, or you had the will or the, fortitude to do that, which he didn't, then yeah, you could do a lot better, but just don't even bother. I mean, it's...
I think one of the mistakes that we can fall so easily in is to black or white thinking and all or none kind of thinking, that we have to either be all in the market or all out of the market. And, wisdom tells us, and prudent investing tells us, that we need to be diversified. We need to have a little bit of different things in order to reduce the risk altogether, because there's the risk of course, losing, which everybody is so familiar with, but there's also the risk of missing out and not getting the kind of growth that you need. And what we have to remember, and I do go through this whenever I bring on a new client, is we look at the market compared to a diversified portfolio, and we see how different that is. And I remember an old strategy, that I learned early on when I got into the business, was for someone who is very preservation minded, you can still have a little bit of exposure to stocks. And, let's say that you had 10% exposure to equities and 90% exposure to something that was guaranteed, or, if some kind of fixed rate of, say, 5 or 6%. Well, in a 5 to 10 year period, your fixed part would increase to the full amount that you started with.
Right,
so let's say you had
right.
100,000 and you invested 90, you'd have 100,000 back. So even if the 10% that you have in equities went to zero, you'd still have a preservation kind of strategy going on. So I think it's important to avoid that black or white, all or nothing kind of thinking.
Absolutely. Yeah, you have to avoid it. You got to be, diversification is the thing I'm hearing most about in the last 3 months. Thank you for the diversification. It really does work, those kinds of things. And it is amazing. It is the greatest, hedge or piece of safety you can have in your portfolio, is to be well diversified. There's nothing better. And I tell you, it covers up an awful lot of strain and stress and a heartache. It really is amazing. And that is the key, because I can't say we haven't seen any. We have seen some situations where we have a very, very broad downturn through every sector. But most of the time, your upticks are coming as a result of 2 or 3 sectors. Very seldom is this dramatic increase in, all sectors. There can be an increase in all sectors, but it's those few sectors that are leading the pack that you own some of, that are going to drive your portfolio on the upside as well. So, yeah. All about
and a real
that.
cornerstone to the financial issues strategy is the dollar cost averaging piece. So that really takes a whole lot of timing out of it. If you're just say, I'm going to be disciplined and I'm going to move into this strategy over the next 6 to 12 months, that takes all the timing out of it. And you really don't even have to ask the question, should I do it now?
Right, exactly. You really should. I have on my website everywhere, if you already own a stock, dollar cost averaging, you don't have to call and ask me. It doesn't have to be on the buy list. It's totally up to you. You can do it. And it is key. And I say this all the time because I just happens to be the case. But I've been dollar cost averaging up in my accounts for, I don't know, the last 6 years, I think. I mean, it's been unbelievable, and it's aggravating, but at the same time, it's had great payoffs. So even it's just that consistency of putting into certain positions. I don't do it in all positions, but certain positions, there's something to it. It's huge.
Mm-hmm.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.